Good morning, Armor Insiders. Welcome to the morning meeting. Don't forget, I'm going to share with you my own personal strategy, how I'm running my own personal capital and capital that I manage for others. And then it's your job, take that information, be the portfolio manager on this virtual hedge fund desk, and be the smart money. Let's talk real quick about the weakest link in the risk monitor. The risk monitor has 10 indexes that we follow, and we look for confluence for the 10. That's what gives us risk monitor green, yellow, or red. And so risk monitor green, November 2nd, every index using our algos gave us a buy signal at the same time, including treasuries. Okay, so TLT is one of those indexes. Everything else is an equity index. It's only one bond index, TLT, which is a long U.S. government bond. All right, so fast forward to today, 9 out of 10 indexes look great. The one Achilles heel of the market of the risk monitor is treasuries, okay? And treasuries look like this. So treasuries had their run off of the low, and I'm just going to blow this up, make it a little easier for you. All right. So treasuries had this risk monitor green was here, and they rallied off the low with the market, okay? And now they've broken back below the 200-day and the 50-day moving averages. And so that is a little bit of cause for concern. It's not enough to change the risk monitor color. We're still making money, market's going up and all that. I don't believe that treasuries have to go up a lot. I think there's a Goldilocks sweet spot that treasuries have to stay in for this market to keep going up. If treasuries go up too much, meaning treasury prices up, rates go down, if rates are collapsing, that would suggest to me something's wrong, like something's wrong in the world, or we're going to have a hard landing. And I'm not sure the equity markets would like that. Conversely, we don't want to see bonds breaking down and rates going up, right? We all know what that does to equities. So there's a sweet spot in here. And it looks like equities, bonds are trying to make a double bottom right in here. They look buyable right here for a rally up. So do I want to buy treasuries? No, I don't want to trade treasuries. If treasuries rally up towards, let's say TLT moves back towards 100, that's just real bullish for the stock market. I'll make more money in stocks than I will trading or owning treasury bond, right? And if treasury bonds were to blow out, I'm probably getting stopped out of all my equity trades because something's wrong in the world. So I'm just watching that very closely, and the PCE numbers came out. Whatever it is, I don't really care what the numbers are. All I care about is the reaction to the news. Treasuries were down before the news. Now they're up. That's all we need to know. Changes I made to the portfolio yesterday that are important for the macro fund. Now, the macro fund is the fund that is the closest fund that expresses the risk monitor. And what we do at the beginning of the risk monitor green is we go with the leadership, the weighted NASDAQ 100, the weighted S&P 500. Okay, so we do SSO, SPY, and SSO right down here. SPY right here. Okay, that's the risk monitor going green. Okay. So we captured all of that. Now what we're doing is we're booking some of our gains up here. And what we've been doing, over the last couple of weeks, is shifting some of the capital over here, which is equally weighted, because I think the equally weighted has some catching up to do. I think that the alpha is shifting. So we've positioned the equally weighted, and we're moving money into ARK Innovation. We moved some money into the small cap index. And in a minute, I'm going to express to you why I moved some money into Bitcoin, okay? But let's just go with the indexes for a second. So what I did yesterday is just I'm reformulating. I still have the same amount of exposure to the market. We're looking at somewhere around 160% exposure to the market, okay? But it's a different complexion. We've reduced the exposure of the weighted indexes and shifted that capital to capture the alpha of innovation, of small caps, of the equally weighted S&P, because that's where the alpha is going. It's not that the big caps are going to go down. It's just that, relatively speaking, I think, 4 to 6 weeks from now, we'll look back and see the gains were larger on the other part of the market as that part's catching up. Okay. So that's the market discussion, stock market discussion. That's the macro portfolio making some subtle changes. All right, let's shift over to the highlighted stock of the day, and that has to be Pure Storage. Tonight, we had an earnings announcement out of Pure Storage. Silver Fox has been working tirelessly for us, doing research on Pure Storage, telling us he thinks this is a huge idea. Erez and I have been on this story for a couple of years, okay? The quarter last night was a great quarter, and yet it doesn't even reflect the AI ramp that I think is coming over the next couple of quarters. They signed another 8-figure deal. The stock is blowing out today. It's up about 13%. I've added to it before. I mean, it was up less than that this morning. I was adding to it in the pre-market this morning. Okay. They signed another 8-figure deal with a major GPU cloud provider. Don't forget, Meta is one of their biggest customers. I think this is a big story. It was a great quarter, and I think the best is yet to come because the ramp hasn't even started yet when it comes to AI. Now let's round out our discussion real quick. I always like to talk to you guys at the end here about the carry portfolio and how we're day trading the S&P. All we do there is carry treasury bills overnight. In fact, all we do is carry treasury bills, and we use firm capital during the day to take positions in the S&P that usually don't last more than an hour, unless we're on a rip and a crazy rip for the day. Usually don't last for more than an hour, and we extract alpha. That whole portfolio was up more than 0.5% yesterday. We made 2 trades in a chop day. Market was down at the end of the day. We were adding alpha. We did that yesterday and the day before. And this week and these days, to me, are more satisfying than hopping on a morning rip and making a lot of money. Those are going to be great. Anybody can do that. Once you learn the basics of day trading, you have a basic playbook, you're going to get morning setups, get on them, and a couple times a month, they're going to skyrocket. You're going to make a lot of money. And that's lots of fun. I mean, don't get me wrong. But what separates an average trader, a zero-sum trader, from a day trader who makes money consistently is the ability to make money on the chop days, is what we've been doing. Okay. We did it yesterday. And 2 days ago, I'm going to blow both days up for you here. Okay. This is the S&P, SPXL. You're looking at a 3-minute chart. Every line on the chart's an armor algo, has to do with the VWAPs, which is the black dots, standard deviations 1, 2, and 3 above, Fibonacci extensions 1, 2, 3, and 4 above and below the opening range. Okay. And the average true range as well. So what I've been sharing with you, so just to go over how we do this, what I've been sharing with you is there's usually 3 setups a day. There's 3 setup locations. There's the morning trade. And if we get that, there are no other trades for the day. If that doesn't work, we look for the trade that breaks the downtrend of the day and or the prior day. Those are even better, right? And then we look for that last trade at the end of the day. Not at the end of the day. We look for the setup where the market sells off hard and there's a crescendo bottom and reversal. Those are the 3 setups we're trading. And what we do when we get the buy trigger, we put all of our capital to work immediately as close to the buy price as possible. And we split our stops into 3s, a third, a third, a third, 10, 20, and 30 cents below our average cost. We're only willing to lose 20 cents on a trade. Okay. So we had the morning set up yesterday. It was a gap down morning. This is right out of the playbook. Gap down to prior day's low, double bottom at the opening range low, close above the VWAP. That's literally written down in the playbook. We buy the close, we buy the move above the VWAP, which we got, okay? And we ride it right up to the gap closure. When the gap closes, we always book some profit and we raise our stop aggressively. If this was going to be a skyrocketing day, it would have never come down. Would have just blown through, kept on going. The minute it comes down, we're done. Trade's over. We had a nice morning, made some money. Market sold off. The next location is one of my favorites. I want you to write this down and remember it. When the market's going up like that, when you get the morning rip, which we did, and the market pulls back, it will either, the locations that matter are the armor VWAP and the first standard deviation below the VWAP. If the market breaks below the first standard deviation, below the VWAP, all bets are off. I don't want to trade long the rest of the day. That usually is a very negative day. It happens a lot during risk monitor red. The market will rally in the morning, reverse, break below the first standard deviation and crater. Okay. So in a risk monitor green, what we saw yesterday was a perfect setup at the first standard deviation below the VWAP. It ripped to close the gap, came down to test, put in the double bottom at the first standard deviation. And what we do is we buy the bar that closes above the VWAP. It ripped back towards the high of the day. We raise stop. And here's the other piece of information to remember. If we're buying a setup that starts at the first standard deviation below the VWAP, we are always booking a profit at the first standard deviation above the VWAP, and we're raising the stop aggressively to that level. And you could see yesterday why. In a chop day, that's all the money there's going to be. The market was trading between the first standard deviation above and below the VWAP, okay? And so that's why we made that money, and it made for a real nice day, even though the market was down on the day and it was a chop day. Here endeth the lesson. Can't wait to work with you guys again. Market will get open, we'll get started with our live stream at 9:30. Don't forget, anybody who wants to work with us, we can do that through the ARMOR report. You get the morning meeting, you get the captain's log, you do it yourself. Become an ARMOR insider. You're live right now. You're talking to me right now. I'll see you at 9:30. We'll go all day. Sometimes we go into the aftermarket if there's earnings announced. And of course, if you need to, and you can't be on the desk and you got your own job and you've changed jobs or whatever, you need me to run the money, I'm happy to talk to you about that. If it's necessary, if it makes sense, we'll do it together. Okay. So just DM me or call me and we can go over that. Everybody have a wonderful trading session. And remember, at the end of the day, you got to be